Hey guys, Akil Stokes here. Welcome back to another random midweek trading video. In today's video, I'm going to share with you some footage from this morning's live trading room session where we spent a chunk of our time discussing ascending triangles and discussing pennant patterns. Now, full disclosure, I did spend the bulk of the session calling pennant patterns flag patterns, so I apologize in advance for you guys that are very literal and can't wait to tear me up in the comment section. I am admitting my mistake up front, so you do not have to punish me. But aside from pennants and flags and some very specific ways to trade them that I believe give you higher quality trading opportunities and can keep you out of danger, the lesson that I really want to discuss and the lesson I really want you to take away from this session is the idea that as traders, we cannot be married to our ideas, right? If this is my idea, look at that. I lost a wedding ring before and I still think my wife doesn't forgive me, so I am not going to let this thing slip through a crack or this would be the very last video that you saw. But back to the point, we want to be married to our wife, so I find my ring, but not our trading ideas. And what this means is that the market doesn't care what we want to happen. We can make predictions and do analysis. The market just doesn't care. The market will do whatever the F it wants, whenever it wants to effing do it. Rather, our job as traders is to stay fluid, right? Stay adaptable and be willing to adjust our analysis as we get new information on the chart. And that's exactly what I'm going to show you in this video as we went from thinking one way to getting new information and actually looking at a trading idea in the opposite direction. Now, last thing, quick heads up before we get started. I accidentally had my wrong microphone on for the first few minutes of the session, so the audio isn't the greatest, but it does clear up as the video goes on, so just bear with it for a little bit. It's not too bad, but I can catch it because I'm used to this microphone. All right, like, subscribe, do all that stuff. That way you can be locked into the content. You don't have to worry about doing it later, and let's jump in. Yeah, a nice ascending triangle here. This is my absolute favorite breakout pattern right here. And again, it's for me, this is a perfect one for many reasons. I'll kind of walk you through it real quick. So if you go to your IPDE back from this move right here, back in the early days of 2022, right? We have a breaking close above our previous level of structure. Would you guys agree? Yep. So that sets us up with what type of bias? Bullish or bearish bias in general? Bullish bias, right? So this is important. Going back off the conversation we had yesterday. It's important to have that bias. That gives us a directional bias. Now, we have an ascending triangle, which we know, or you know now, is a pattern, a classic pattern formation where we would expect a bullish breakout. It doesn't happen all the time, right? There's different shapes and sizes, but we have a flagpole here. Excuse me. We have price action retracing, creating an outside return. Then we have a retest of the high, and we have a refusal to break that high. And this is an area that scares a lot of people because what do many of you guys call this? I don't call it this, but what do many of you guys call this? Many of you guys will call this a double top. I call it a retested structure, but many of you guys will call it a double top. And when we hear the word double top, we automatically assume what direction? Bullish or bearish? We automatically assume shorts. That scares a lot of people. So we have our retested structure, or double top, whatever you want to call it. Price reacts off of that, right? And then it comes back up to test that level again. So in this scenario, what happens is this also scares a lot of people because of one of the oldest trading myths out there. And I was taught this as well by my trading mentor, and then later had a change of heart as I grew and as a trader. But we see this as, okay, we had, Akil says the most aggressive reversal is a V reversal. So we had a V reversal, and then we came up and tested it again, which is this strong and powerful classic pattern formation called a double top. And then we came and tested it again for a triple top. And although I didn't pay attention during elementary math class, I know that 3 is more than 2, and therefore this is more powerful. Does that sound about right to anybody? This is more powerful. However, what we need to pay attention to is the full story. So if you look at this from like a supply and demand perspective, price one, we have our bullish bias. Let's just keep that in the back of our head. Price comes to an extension and we get exhausted, right? Buyers slow up, sellers increase, price pushes down, right? Normal trend stuff, would you guys say? Anything out of the norm? This is what trends do. They ebb and flow. They go up, they go down, right? Price comes back up and retests. All right. Well, this is normal trend stuff too. We should retest. And if we have a strong trend, we should break out of that. Okay. We don't break out of it. We hold. We bigger double top. It's actually a smaller double top up here as well. And then we push off again. So we're seeing this. We're like, okay, a little bit of a bearish sign. But what do you notice on the second retracement in comparison to the first retracement? What is the difference? What is the main difference that you see? Well, the lows are higher, which means as the sellers tried to push price action down, imagine this as being like a game, an NFL game in the trenches, like our Super Bowl that was full of defense. As the sellers pushed price action down, they were successful, but were they as successful as the last time? Well, no, right? If they were more successful, that would have had an extension to the downside, right? They were less successful. Okay, well, that's a head scratcher. It's a little bit of a clue right there. Okay, well, maybe they're not as powerful as we may think. We come up, we test it again. And we're like, okay, well, the bulls are going to make a run. This should break through again. It doesn't. And this is where a lot of traders get scared, because the thing that I don't think I actually finished the thought on about what my mentor told me earlier on in his career was that the more times a level of structure is tested, let me know if you ever heard this before, the more times a level of structure is tested, the more important it is. And there may be some circumstances where that is true, but it's not as general as you may think, because again, 3 is more than 2, but is this an actual powerful sign? Maybe not, right? Then we push off that again, and I think you guys know the answer. What happens on this next retracement? Does it become lower or higher? It's higher again, which means the sellers are losing even more pressure. They're getting weaker and weaker with each push. So if the sellers are failing at pushing it down, right? Meaning that the buyers are defending those levels, it's only a matter of time before what happens? An explosion to the upside. But this is all prefaced by the fact that we already have that bullish bias from this violation. That gives it even more power, because now the expectation in general is bullish. And now the pattern, so the where is bullish, the pattern, the what is bullish. Now the what and the where are aligned, which is what we want to see as traders. We want to see both those things aligned. So very nice ascending triangle like that. More specifically because it comes after the break and close of a previous level of structure. Now Scott says, oh, RSI overbought. Yep. ... Is that good sign, bad sign? Is that scary? Is that confirmation? How are you looking at that, Scott? Ollie says good sign for breakout. And I'll bring my RS of I up a little bit. And obviously, there's a fundamental factor about this as well. We had good and bad news for Coke. We had some surprise earnings, but also some. I should look right here. Here we go. I forgot I had these on my chart here. There we go. Here's what Coke did. KO knocked it out. Boom. Right. But so Scott says RSI overbought, but provides no details. Are you saying that in a positive way or in a negative way? Right. Interesting, because you can have two traders. Right. I was talking to a trader about this the other day. I shared a video on gold in the weekend trading edge video, and a trader had a different opinion. They're like, hey, I don't think it's going to do this. I think it's that, it's that. And I said, hey, that's the cool thing about trading, right? We can have two traders that look at the same charts. We can have different opinions. One could be wrong, one could be right. We can both be right. We could both be wrong. So the interesting thing about trading, and going back to our 100 traders in a room analogy from yesterday, you can have 100 traders in a room looking at the RSI and saying that the RSI went overbought. And you're going to have some traders that are like, Akil, we got to sell. It's overbought, overextended, exhausted, yawn. And then we're going to have half of the other traders being, oh, yeah, that's high momentum, baby. I like that, right? So as Scott's example says, Scott says, waiting for momentum to slow down, a good sign for a potential reversal. Yeah, so both traders could be right. You can see the overboughtness of the RSI. And again, my RSI is up to 80, but traditionally the RSI overboughtness is 70. We've played around with ideas of trading a breakout after we get past 60 or 66, somewhere in that area, so a little bit lower. So you can see that overboughtness comes right at the breakout candle. This is one where you'd want to look at traditional volume as well. That overboughtness, the breakout of the RSI overbought level, comes right at the breakout candle. So as Ali says, good confirmation of a breakout. And now we go massively overbought over my 80 all the way up to about 85 almost. And Scott's saying, okay, well, this is going to be a good sign that maybe we're running out of steam and I may get a pullback. And if I'm a pullback trader, I'm probably looking for a pullback back into the previous level of resistance that was broken, and then looking for the next extension higher. Are any of these traders wrong, guys? Any of these traders wrong? No, they're both right. They're just using it in different ways. So a perfect example right there. Give me a second. I want to reload my my recording real quick because all right, perfect. Had the wrong microphone on and it wasn't actually on, so just in case I blow everything up. So cool example there of an ascending triangle, Akil's favorite pattern. While we're on the topic of triangles, well, triangle-ish type patterns, breakout patterns, let's go to euro dollar. Real quick, we should, not on the weekly, but we should take a look at the Forex Factory real quick. We have some things coming out today. This is tomorrow, sorry. Reminder, if you weren't paying attention, right? This is the non-farm, because of the brief government shutdown, the non-farms number got pushed till tomorrow instead of last Friday. So you can treat today as kind of one of those weird, wacky consolidative days before the number comes out tomorrow. So just keep that in the back of your mind. So that's it for today. But let's go to euro dollar. Let's get off the weekly and let's head down to a smaller time frame. And we're going to have a flag pattern here. Now, look at that. This was a beautiful flag pattern this morning and it failed, right? So I had a whole example prepared for you about how to potentially trade this flag, why it is a great looking flag, and guess what? It failed. Is this a problem or is this normal in the market? It's normal, right? Nothing works 100% of the time. So if you're a trader that freaks out and bails on a strategy because it fails one time, you're going to be doing a lot of bailing. But let's talk about this from the original perspective, and then we'll talk about it from the new perspective right here. I'll give a good example of how we're shameless mercenaries in the market. So similar situation here, right, with euro dollar, right? We can start higher time frame if you want, just to kind of get perspective on what things have done, right? We have had a violation here. Price action gave us higher highs up here, so a breakout to the upside. We want to measure where price action came to, just to get some perspective, right? We are back at a previous level of consolidation, but I think we mentioned this yesterday, or in my review, or maybe just talking to myself, as many of you guys do per the YouTube community poll question. We do have a little bit more room to go higher here. So we're still in that bullish continuation state. So keep that in mind. So bullish bias here on euro dollar. So we have that bullish bias and we're looking at a potential continuation higher. We have the break and close above here. We're at a little bit of a consolidative level, but we do have room to go higher here as well. And then we had this flag pattern. All right, so if you're an aggressive flag pattern trader, right, we know there's 3 ways to trade flags or any type of breakout: before, during, and after. The before is establishing your position somewhere within this flag. I don't see a way you would be able to do that, but maybe you're just aggressive and you put a limit order there. The during would be waiting for the breakout, either of the slanted trend line or the horizontal level of support or resistance, excuse me. The after would be like we did with the ascending triangle, wait for the breakout and then wait for the retest. Now, each has its own risk and reward. If this thing broke out like Coke did and you were before, you would capture the biggest portion of the move. But there's no safety. There's no confirmation that it will break out. If you're during, right, or after, you at least get a little bit of confirmation that the breakout is happening, which means would you have ever been in this trade as it goes down against you? No, you would not. So again, I'm not saying one is better than the other. It's different. The more aggressive you are, the more opportunities you're going to get. Good and bad, you're going to catch more winners and you're going to catch more losers, right? So yeah, to each his own. The more conservative you are, you're going to avoid more of the losers. Yay! But you're also going to miss some of the winners because you need extra confirmation. So the ones that like break out right away and never come back, you got to wave bye to them as they drive off in their car full of money. Again, to each his own. And this is, about learning about your trading style and your personality. My advice is like understand, are you more aggressive or conservative in general as a person? And that will help kind of find the right fit. We always talk about myself being conservative and how I would love to have I've already gone to more aggressive entries, but I said I would love to have an even more aggressive entry, but I just can't bring myself to do it. And part of that is my personality. I'm just not a super aggressive person in real life. IRL, as the youngsters say, right? So I've never been able to make that change. Do you trade them, Akil, flag patterns? Yeah, but I don't necessarily trade them as flags. I trade them as just regular structure trading. So I would need the break and close above the horizontal line of resistance up here, and then just like with Coke, look for the pullback. But the thing is, guess what? I would trade this the exact same way if it weren't a flag pattern, if it were just a level of structure. So I don't look at it as a flag. I just look at it as a previous level of structure being broken and a pullback. And again, like I mentioned in the foundation course, I just classify everything under 3 ways of trading, right? So whether it's a head and shoulders, whether it's a flag, whether it's this or it's that, it falls under 3 categories. Is it a rejection? Is it a continuation? Or is it a breakout? Would you look for a continuation? Hell yeah. Yeah. I would look for a breakout, pullback, and a move higher, assuming we didn't break out to the level that our targets would be at. With that being said, our flag just got invalidated, right? We broke out to the downside and not the upside. So would I still look for this now after this lower low, lower close? No. Right? But now we can look for the opposite. So if we go back to the Akil bracketing technique, right? Bracket the highs, bracket the lows, higher high, higher close, identify higher high, higher close, predict continuation upwards, look for trading in the bullish direction. We don't have that. But we broke and closed to the downside. So, excuse me, what type of opportunity do you think I can look for to the downside? Well, we may be able to look for a shorting opportunity here. Now, the biggest question is, and I didn't look at this morning because I was focused on the upside only, is there room to go lower, right? We have a few levels of structure here that we need to pay attention to. I'm going to steal these lines real quick. We have these little spiky wicks that's right below here. I'll measure these off for you. We have this level right here, which is really small and really insignificant, but I do want to take it into account. We have this level right here, which is much more the powerful level, right? You can see in this zone right here, not only do we have previous structure resistance right there, but we come back and we test it there. So that's the level that really stands out to me. We have a psychological number in there as well at what do we have? 118.60. No, I thought it was 118.50 in there. Nope, it's gonna be a little bit lower. So let's do a few things. You guys know what I'm gonna do already. I'm gonna bring in my Fibonacci from a swing low to a swing high, see if there's any Fibonacci levels in that zone. Look at that. We got a 3D2 right dead smack in the middle. Alert ears go up, whatever you want to call them. And what's the other thing I'm going to bring in, guys? I guess we have a lower level of structure too we can bring into consideration. Yep, I'm going to pump up the volume, right? I'm just curious to see where this volume's at in this level. And what do we have here? We've got a void from said level, ignoring this level right here as I suspected. And it doesn't pick up until, what a coincidence. Well, not right at the 3D2, but right at that line I drew in. And as I always say, I promise I didn't do this earlier at all because I was only looking for buying opportunities. But until we got new information, obviously. But what I always say about volume is this: if you get good, when you get good at identifying structure, you're gonna pretty much be able to identify where the volume spikes are at. There will always be surprises. There's every once in a while I'll be like, man, no one cares about that level. Oh crap, it does. Okay, guess I was wrong. And that's why we use it no matter what, right? But this gives us a level. So that sets up our trade, right? We have a lower low, lower close, breaking close below that level. Let's look for a pullback into this zone. We'll go down to the lower time frames too for you day traders and look for a continuation down to that, what is it? That 118.71 level. So let me get into our pro trade log real quick and then we'll dive down to the lowers. You dirty day traders. We'll go to you dirty day traders time frames and take a look at that. This is Euro. All right, let's do this. So let's go down to the lower time frames real quick. Akil, I have one question. Would you see this more of a flag or a triangle breakout pattern? Flag, but a flag is a triangle though, so it's the same thing. So if a flag is the same thing as a triangle, or a pennant, I should say, a pennant pattern is the same thing as a triangle, just with a flagpole. So apologize if I've been saying flag, I've meant pennant. I don't care about these terms. You know what it is. You know what it is, right? Who cares what it's flag, pennant, right? I guess I should care for newer traders, but you guys know what I was talking about. I drew it out, right? But it's all the same thing. So a triangle is just a triangle is just a pennant pattern without the flagpole. The difference is, well, the difference in your traditional way of looking at it is that a triangle is a neutral pattern, meaning that it doesn't really tell you a directional bias at all. The flagpole adds a directional bias because you have the bullish move in this case before it. But honestly, in either situation, the directional bias comes from the overall analysis. So the directional bias of a triangle or a flag comes from what's your overall prediction in the market? Did we violate a level of structure? Are we in a situation where we believe price is likely to go lower or higher? So that's where the true directional bias comes from in all of these things. So, but yes, correct. I apologize. I've been saying flag. I don't know why I've been saying flag. I'm still thinking about the Bad Bunny Super Bowl halftime show and all the flags that came through. But it is actually a pennant pattern. All right, real quick, and there's some more questions that came through. I want to dive down to day trading time frames because I'm going to forget. And let's see. So again, lower low, lower close. Obviously, day trading got a lot more room. We got a nice little level of structure right here that you can look for a pullback to come to. I want to go down to a range bar chart too. This is a 6. ATR is 6. That's not what I wanted to do. There we go. And let's go to euro of dollar. And I apologize if I'm going fast. Whenever I get into day trading mode, I start speaking faster because I have like PTSD from day trading and like trying to do a million things at once. So yeah, so you can look at it on a range bar chart as well if you want. A 6 range. I typically use the 5 range just because creature of habit with stuff. But same thing, look for pullback and continuation. All right, that's your pennant pattern for you. And the biggest takeaway I want you guys to take away, right, from all the cool technical things that I shared with you is that, do you guys see how I had a change in opinion? How I came in all morning, it was on the chat saying, oh my gosh, beautiful looking bullish pennant pattern. I said flag, but pennant pattern, looking for bullish breakout. I even had it in all my notes. All my notes this morning, I'm looking at this opportunity for my personal enjoyment. And then I come back, right, get my kids lunch ready, take them to the school bus, and I come back and we have a break and close to the downside. And what did I do? Did I stick to my bullish ways? Was I stubborn? Did I say, man, I predicted bullish earlier. You guys said that I predicted bullish. I can't look like no idiot, so I'm just gonna, go down with this sinking ship, as many traders do, right? You guys that move stops back, that is what you're doing. You're going down with a sinking ship because of your own stubbornness. And you know where that stubbornness will get you? It'll get you buried in the middle of the Atlantic or wherever the Titanic is at. And that sub that went to find it, that was improperly done and combusted or condensed. Yeah, you'll die as a trader. But rather, what I did was I said, hey, I've got new information, right? Imagine me like at a desk and I've got my opinions. I'm at my war center with all my computers and all my generals around. I'm yelling out, Eurodollar, bullish flag, load the missiles, right? And then someone slides a little note on my desk and it's like, hey man, so it actually wasn't them that did the thing that you're ready to go to war over? And I'm like, I have two choices. I'm like, okay, well, I already said load the missiles, so I might as well load the missiles. Or I'm like, okay, guys, so it wasn't that country, but it was this country over there. So let's like readjust the missiles. We can still keep the missiles loaded, but let's just readjust them and fire off in a different direction. We got news, ADB news coming out right now. That's why we're seeing dollar movement. So again, keep an eye on this on the range bar chart. Sorry, slipping back into day trading mode. But that's the main thing I want you to take away from that is like, we don't need to be stubborn as traders. We should be able to adjust. By the way, if you're looking at this on a 15-minute chart, again, you got that spiky action, which isn't going to help you out as far as your continuation trade. But a range bar chart, look what you got. What do we do on a range bar chart? Pulled back, lower low, lower close. That's your entry, guys. That's your entry. Again, looking for, this is why I love range bar charts, right? Can you do anything with this wick here? Is there any entry, right? This is a news-based reaction, right? We have a long wick and a rejection, right? You can't trade this. There's no entry reason here. But range bar charts chop that action up. So again, our original level, we were looking for what? 118.70s, around that area, right? Let's take a look at this on a range bar chart. Let's put down our 118.70s. 118.70s, right there. Here's your entry. Right here, if you're doing lower low, lower close, I should say, right? RSI overbought, lower low, lower close. What else do we have here, guys? Sorry, I'm back in day trading mode. I'm going fast. I'm going to slow down. Sorry. What else do we have here for any confirmation that we might have needed? RSI diversions. What type of diversions? Yep, we do have an RSI swap directly from sold to overbought. What type of diversion specifically, Branko? It's the one I mentioned in this weekend's video where I showed you the chart that made everyone's life bad. Hidden diversions, right? We know that hidden diversions is positive for trend continuations. That's another thing that complements our trend continuation trade. So if you're using a 1 ATR stop, range bars are easy because the ATR is always the same because every bar is the same range. So it's 5 every time. Math is easy. A 1 ATR stop is going to put you, was it 119.13? Right there. A 2 ATR stop would put you at 23, so a little bit higher there, right? Target you're looking for is right down here. We can bring in some Fibonacci confluence as well. Fibonacci extension from our swing high to swing low. And you can see that you have a 1618 Fibonacci retracement down there. Bada boom, bada bing. That's your trade. That is your trade right there. Nice little day trade. So I hope you guys enjoyed the video. Before you go, this trade did end up being a loser, so boo. But seeing how you guys made it this far, I know that you're here more for the education. I know that you are educated traders and you understand that every trade isn't going to win. So I can care less about only showing you winners on the channel. I don't actually think that helps you as a trader. Rather, I want you to experience the reality of trading, which means sometimes you can do absolute crap analysis and still get right because you were lucky. Sometimes you can do brilliant, spot-on analysis and still be wrong because no system wins 100% of the time. The thing that you need to keep in mind, bigger picture, is the law of large numbers. And the thing that we're doing as traders is we're not trying to pick which trade wins and which trade loses, right? That's practically impossible. Rather, we are trying to find a strategy with an edge, which means a statistical advantage, and then we are trying to consistently extract that edge over and over in the market on a consistent basis. Understanding that it's going to win sometimes, it's going to lose sometimes, it's going to go through winning streaks, heaters, it's going to go through losing streaks. I don't know the exact word for it, but I call it that. But if we consistently follow our plan, follow our process, at the end of the day, big picture, we will be on the profitable side, and you can trust me on that. So before you go, like the video, subscribe if you're new. That way you don't miss the next random video that I put out. I've got another one stored, but I don't know when I'm going to produce it yet. Got a podcast coming out as well for you guys. And until next time, plan your trade, trade your plan. Take care.